Americans are struggling, absolutely struggling to make their mortgage payments in 2025. Let's dive into it. Hey guys, welcome back to the channel. Frank Talks Money. Real quick guys, you know what it is. Please smash that like button. The more likes the video receives, the more the algorithm will share the video with more like-minded people like you and me. Now let's get right into the content. Guys, today in 2025, Americans are absolutely struggling to make their mortgage payments. Mortgage delinquencies are rising at an alarming rate in 2025, especially with first-time homebuyers, military service members, and veterans. If you're going through a financial crisis, you might consider the ideal of simply stopping payment on your mortgage. Stop making any payments. It is an option that some homeowners consider in difficult times, but that is a bad decision all around. And the number one reason why that is a bad decision to stop paying your mortgage payment is because it will ruin your credit and your home will go into foreclosure. So you definitely do not want to just stop paying your mortgage. Guys, two of the main reasons right now in 2025 individuals are struggling to make their mortgage payments. Number one, layoffs. The economy is starting to slow. We're already seeing what's going on in the federal government, with our President Donald Trump trying to shrink the government and laying off hundreds of thousands of people. And then number two, individuals are suffering because they are seeing their property taxes increase and their homeowners insurance increase, which means they need more money into their escrow, which means their payment goes up. And I've seen and heard of some ridiculous amounts, guys, for these escrow accounts. I've seen people have their escrow, their payment goes up $3, $4, $5, $6, $1,000 because of escrow, because their property taxes increased and their insurance increased. Guys, to take a person just say next month, your payment going to go up $600. That is a lot. That is a lot for individuals that are already struggling today in 2025. Guys, I got a clip for you. Take a look.
How can banks go ahead and just shoot up your escrow by $400 a month and just call it good? Like, who just has the ability to make $400 extra per month? And that's, if you're unsure on the math on that, it's almost $5,000 a year. Someone tell me.
So guys, as you can see, those are some serious mortgage increases, and they're all related to the escrow going up, which means you need more money in your escrow. So guys, I have been a victim of this myself. In 2024, my home insurance went up. It went up $700, right? Over the prior year. They jacked me up. And then I called around, tried to get estimates. Everybody's about the same. I'm like, damn, what's going on? I know it's inflation, but shit, this is ridiculous. So my home insurance went up $700. Then my property taxes also went up another $1,000. So between my property taxes going up and my home insurance going up, that was $1,700, right? So you take that $1,700 divided by 12, right? So I need to pay, so my payment was going to go up another $141.67. But me, since I got some money saved, emergency fund, things of that nature, I just paid that $1,700 into my escrow so I wouldn't suffer and have my payment go up. Guys, if you got somebody, that's barely making it, just trying to survive, living paycheck to paycheck, then you tell them one day, next month, your mortgage is going up $200, $300, $400 because we need more money in your escrow. That is a lot for individuals to deal with today in 2025. That is a lot. So I've suffered from that myself, seeing my escrow increased, but luckily I had the money to pay into my escrow, so my payment will stay the same. So guys, hang tight. got another clip for you.
If you're a homeowner whose mortgage has increased due to taxes or insurance going up, this is a tip for you. Now, if you're more solidly into your adult life than I am, you might not need this tip, but I think it's really important for people to know if you didn't already. I got a notification about a month and a half ago that my escrow was going to be going up, and therefore my mortgage payment was going to be going up by about $285 every month due to my taxes increasing. That's a lot of money, and I was very concerned about that, but I was able to get my payment down to almost what it was before by going through an insurance broker. As far as I understand it, an insurance broker works for you, their client, not for insurance companies, and they're able to help you find better deals on your home insurance. So when I found out that my mortgage was going up, I contacted my insurance broker, who I haven't really talked to a lot for the last few years since I bought this house, and I said, hey, my mortgage is going up by a ton. Is there any way you can look into different insurance options for me and see if I can get my payment down? It only took a day or two for them to look through all my options and find something that was less expensive, and I actually have better coverage on my house now. They facilitated almost everything, made it very easy for me to cancel my old insurance and switch to the new one, and then I just had to contact my home lender and tell them I was switching insurance and that I wanted an escrow analysis to see what my new payment would be with the new insurance. I saved so much money on my insurance that my new mortgage payment is only about $20 higher than it was last year versus $285 higher. So if you're a homeowner and this happened to you too, contact an insurance broker and see if there's anything they can do to help you find a cheaper insurance.
It's that time of year again where my mortgage payment's going to go up. So every October, my mortgage company does an escrow analysis, and inevitably they tell me my payment is going up because property taxes and homeowners insurance have gone up for the year. I'm too much of a planner, and I'm an accountant working spreadsheets all day, so I could not stand not knowing how much it was going to go up and be given like a 1 month notice. So I looked over their escrow analysis that they provided, and I created a spreadsheet to pretty much replicate what they did so I can calculate it ahead of time. I'm sure every company is different, but we are required to have 2 times our escrow payment amount in our escrow at all times. So if it is projected to drop below that 2 times amount, then that is what creates a shortage in the account. We will be projected to have a shortage in the account. So based on my calculations, our monthly payment is going to go up $106.86. I should be getting the analysis report in the next week or two, so we'll see how they compare. We could pay off the total shortage in full, but it's $1,300. I really didn't plan for it, so we probably won't. But if you don't want to be surprised about how much your mortgage is going up, I say take a look at your escrow analysis report and see if you can replicate it. Let me know if you have any questions.
So guys, the number of serious mortgage delinquencies, which refer to loans that are more than 90 days past due but are not actively in foreclosure, rose to the highest level in nearly 2 years in the fourth quarter of 2024. That's October, November, December. Overall, about 2.2 million mortgages were either delinquent or in active foreclosure at the end of 2024. In particular, first-time homebuyers, military members, and veterans were among those who skipped payments most frequently, according to the Fed of New York. For example, the report looked at FHA loans, which are typically used by first-time homebuyers. Their delinquencies rose 1% in the fourth quarter of 2024, and that was a percent higher than it was prior to the COVID pandemic. Meanwhile, delinquency for the VA loans, which are made available to military service members or veterans, rose another percent in the fourth quarter of 2024. So guys, like I said, the main 2 reasons individuals are being delinquent or having struggles paying their mortgage: increase in escrow, being fired or laid off their jobs. So guys, if you find yourself in this situation, try to exhaust all avenues to save your home. You know, I'm sure there's something you can work out with your mortgage provider. May get some type of modification, ask for the county to reassess your property. And a lot of this really is bad with new constructions also, because with a new construction, typically your taxes are only based on the land. And then when the next year come around, then they assess the structure. Man, that can just balloon your escrow because with a new build, because that first round they only assessing the property. Then when it comes around that next year, they add the structure to it. Man, your escrow can go through the roof. So guys, that's my talk, on why individuals are struggling to make their mortgage payments. Please remember to like the video, share the video, and most important, please consider subscribing to my YouTube channel, Frank Talks Money. And with that, guys, always remember, financial decisions you make today will impact your financial life tomorrow. Thanks for tuning in. Frank Talks Money. I am out.